Good afternoon, ladies and gentlemen, and welcome to Snam's 2013 full-year result presentation. Today's agenda will be structured in two parts. I will start by outlining the main highlights of 2013 and some recent developments. Antonio will then focus on the financial result in more detail. At the end of the presentation, we will be happy to answer any questions you may have. Let me begin with the main highlights for the full year 2013, as well as providing you with an update on the business. Despite a tough and challenging environment, we are pleased to report for 2013 a solid set of operating and financial results consistent with our track record of delivery. Snam's sound operating performance in the period is highlighted, amongst other things, by an EBITDA of around 2.8 billion euro, almost in line with 2012. Adjusted EBIT was over 2 billion euro, down 2.4% versus 2012, and the trend in the consolidated EBIT was driven by the positive contribution of both the transport and storage businesses, offset by the reduction in EBIT from the distribution business, mainly due to the one-off positive tariff adjustment in 2012 of 143 million euro. If we do not take into consideration the positive one-off in the distribution activity in 2012, the adjusted EBIT shows a remarkable growth of approximately 5% on like-for-like basis. Antonio will comment in more detail later on. During the year, we focused on optimizing the structure and the cost of our debt in line with our commitment to maintaining a solid and efficient capital structure. This allowed us to reach a reported net income of 917 million euro, a remarkable increase of 17.7% versus 2012. Turning to our growth path, our investments are aimed at increasing the flexibility, liquidity, and security of both the Italian and the European system, enhancing gas flow and interconnectivity of EU markets. In 2013, we deployed total investments of approximately 1.9 billion euro, in line with the guidance provided at the beginning of the year. Around 1.3 billion euro was attributed to a capex for infrastructure development in Italy, and around 600 million euro to financial investment for the acquisition of the 45% equity interest in TIGF. The acquisition of TIGF, in particular, gave us the opportunity to build up a strategic platform for gas infrastructure development in order to improve the cross-border interconnection in Europe. It also allows us to diversify our regulatory and geographical risk, allowing new investment opportunities with assets at various stages of the infrastructure investment cycle, and therefore enhancing our asset portfolio. Consistently with our strict financial discipline, the investment in Italy and the acquisition of TIGF were almost covered by an efficient management of the operating cash flow, which reached a sound level of around 1.7 billion euro. This allowed us to preserve a solid balance sheet with a net financial debt of 13.3 billion euro. Once again, in 2013, we remained focused on operational efficiency. In particular, our controllable fixed cost resulted equal to 460 million euro, flat in real terms versus 2012. This is a significant result considering the growth of our activities as shown by the increase of transport and distribution grid as well as of storage capacity. Last year's results provide evidence of our commitment to disciplined execution of a high-quality CapEx program, to operational and financial efficiency, as well as to maintaining a strong balance sheet. This will allow us to drive a profitable growth and to support our shareholders' return. Last but not least, as you probably know, in 2013, we added a review of the regulatory frameworks for the transport, distribution, and regasification businesses, which represent around 85% of the total Italian RAB. The final outcome once again confirms the stability and visibility of the criteria, generating a supportive regulatory environment for our CapEx program, which is devoted to the development of gas infrastructure in Italy. Let me now provide you with a quick overview of the Italian gas market, bearing in mind that our business development is not strictly linked to the gas demand trend. In 2013, gas consumption totaled 70.1 BCM, down 6.5% or 4.8 BCM year-on-year. The decrease was mainly driven by the reduction in gas consumption in the power generation sector. In particular, the thermoelectric sector experienced a decrease of approximately 16%, approximately 4 BCM, driven by the reduction of 4%, 14 terawatt-hour or 2.7 BCM in electricity demand, largely due to negative macroeconomic trends. The remarkable recovery in hydroelectric production, 9.5 terawatt-hour or 1.8 BCM, driven by higher levels of rainfall. A significant increase in electricity production, 7 terawatt-hour or 1.3 BCM from renewable sources, in particular solar and wind energy. These negative elements were partially offset for 1.5 BCM by reduced usage of coal and oil products in thermoelectric production. Gas demand in the industrial sector decreased by approximately 2% on a like-for-like basis as a consequence of the declining trend in industrial production in Italy throughout the year, approximately down 2.8%. Gas consumption in the residential sector decreased by approximately 1%. This was mainly due to a milder weather condition during 2013 compared to 2012. Adjusted for the weather effect, the sector experienced an increase of more than 2%. This was mainly due to the higher usage of gas versus other sources, in particular oil for household heating. Finally, gas injected into the network is, in 2013, decreased by 8.9%. The difference between gas injected into the network and the gas demand trend is related to storage flows. In particular, the higher withdrawal from the storage site and the lower injection activity versus 2012 resulted in a negative balance of around 2 BCM. Let me conclude my comments on the 2013 results by focusing on the dividend. Snam has consistently been committed to delivering attractive returns to its shareholders. Our aim has always been to maintain a sustainable combination of attractive dividend and capital growth. On the basis of 2013's sound results and considering our solid capital structure, the Board of Directors yesterday decided to propose the annual shareholder meeting dividend distribution for 2013 of 25 euro cents per share, in line with the dividend per share for 2012. 10 euro cents per share was distributed as an interim dividend in October 2013. The balance of 15 euro cents per share will be payable on May 22nd. The fiscal year 2013 dividend, subject to the approval at the shareholders' meeting, result results in a dividend yield of 6.2% in the top range of the utility sector. Our future dividend policy will be outlined at the strategy presentation in March. That's all from me. I will now hand you over to Antonio, who will comment in detail on the 2013 results.
Thank you, Carlo, and good afternoon, everyone. As we have said before, 2013 was an eventful year for Snam, which was characterized in particular by the interest acquisition in TAGF for around 600 million euro, the significant optimization of our debt structure and subsequent positive impact on financial charges, and the reduction of gas consumption in Italy with a negative impact on revenues limited to around 20 million euro, thanks to the group's low exposure to volumes. Looking now at the 2013 consolidated income statement, EBITDA amounted to 2,803 million euro, almost in line with 2012. Adjusted EBIT decreased by 51 million euro, down 2.4%, reflecting the increase in depreciation. The adjustment is related to the early retirement plan cost of 26 million euro, which we will comment on in more detail later on. Net profit for the period amounted to 917 million euro, increased by 17.7% compared to 2012, affected by the one-off financial cost of the unwinding of the interest rate swaps. Regulated revenues amounted to 3,491 million, with an increase of 14 million euro compared to the previous year, up 0.4%. Net of pass-through components, regulated revenues decreased by 32 million euro, reflecting the following elements. Transport revenues grew by 65 million due to the positive contribution from the investments carried out in 2011, equal to 102 million euro. This was partially offset by the annual tariff adjustment of 16 million euro and by the effect of the decrease in gas injected into the network, amounting to around 20 million euro. Distribution revenues decreased by 147 million, mainly because 2012 revenues were positively affected, as you remember, by a one-off tariff adjustment of 143 million related to the graduality mechanism. Net of this effect, distribution revenues were almost in line with the previous year. Storage revenues grew by 51 million, a remarkable increase of about 13%, mainly due to the contribution from investment carried out in 2011. The increase in pass-through revenues was mainly due to the overall gas transport system balancing services. Other revenues amounted to 38 million euro, a decrease of 106 million compared to 2012, mainly in the transport business, due to revenues related to the disposal of inventories not used for operating activities, which was accounted in 2012. To wrap up, net of the non-recurring revenues accounted in 2012 in the distribution business, total revenues again grew in line with the increase in our activities in 2013, consistently with our business model. Moving to operating expenses, total cost decreased by 78 million, reflecting our effective control of regulated activities costs and the reduction of no-regulated costs. Controllable fixed costs in 2013 amounted to 460 million euro, with an increase limited to 7 million in nominal terms, corresponding therefore to a flat evolution in real terms compared to 2012. Such a positive result is even more remarkable if we consider the growth of our activities during the year. Variable costs increased by 14 million euro, mainly due to the change in the gas inventory used for the operating activities. Other costs decreased by 71 million compared to 2012, when we accounted some risk fund provisions, mainly in the transport activity. The increase in pass-through cost was mainly due to the overall gas transport system balancing services. Non-regulated costs amounted to 44 million, decreasing by 74 million euro compared with the previous year, mainly reflecting the disposal of inventories in 2012, as previously mentioned. 2013 total costs include a provision of 26 million euro related to the early retirement plan for 300 employees that will be implemented during 2014. To wrap up, 2013 operating costs net of pass-through marked a significant decrease of 124 million euro because 2012 costs were affected by some risk fund provisions and disposal of inventories mainly related to transport business, partially compensated by the provision for the early retirement plan accounted in 2013. Consolidated adjusted EBIT amounted to 2,060 million euro, with a decrease of 51 million, down 2.4% compared to 2012, mainly due to the positive contribution from regulated revenues, amounting to around 111 million euro, and mainly related to the transport and storage businesses. The one-off tariff adjustment accounted in 2012 in the distribution business, down 143 million. The slight increase in controllable fixed costs of around 7 million. The increase in depreciation and amortization by 63 million, mainly due to the new asset entered into operation, and the higher depreciation in the distribution business and mainly related to the depreciation of net consideration accounted for the new concessions. Other positive effects for around 25 million euro, mainly reflecting the risk fund dynamics, and finally the adjustment of the early retirement plan equal to 26 million euro. If we don't take into consideration the positive one-off item in this distribution activity, growth in the adjusted EBIT would be 4.7% on a like-for-like basis. Looking at the contribution by business segment, the transport and storage businesses registered an EBIT growth of 95 million euro, up 88.4%, and 48 million euro, up 17.8% respectively, mainly driven by the increase in regulated revenues and the significant reduction of operating costs. Now, I would like to conclude the review of the group's income statement by commenting on the net profit performances. 2013 net profit was 917 million euro, up 17.7% compared to the previous year, when we accounted the one-off item for the unwinding of years equal to 213 million net of taxes. In addition to the EBIT decrease we have already explained, the other components impacting net profit were: firstly, inter-expenses registered a slight increase of 13 million, mainly due to the increase of debt. At the end of 2013, we had around 13.3 billion euro of net financial debt, with a higher outstanding average debt of around 600 million. All in all, the remarkable result on financial charges has been achieved due to the significant debt optimization measures carried out in the year, and that will be better explained in the following slide. Secondly, a 10 million euro decrease in the net income from associates. The increased contribution from both distribution associates and Interconnector UK, up 17 million euro, was more than offset by the negative equity contribution of TIGF, down 27 million, which was impacted by a non-recurring tax burden paid by the French BIDCO for the TIGF acquisition, as already mentioned in the 2013 third quarter result presentation. Let me remind once again that this component was included in the total consideration of 597 million euro paid by Snam and was already priced in the total target return assumed for the acquisition. As far as income taxes are concerned, tax rate in 2013 was around 43%, in line with 2012. Moving on to the results of the 2013 debt optimization exercise, we would like to highlight that at the end of the year, we have a significant liquidity buffer, around 4 billion euro of undrawn committed credit facilities, excluding the outstanding debt of around 1 billion of uncommitted facilities used for treasury management optimization. The maturity profile is well spread over time, avoiding major concentration issues going forward. The average maturity of our outstanding medium to long-term debt is around 5 years. I'd now like to spend a few moments explaining the key drivers behind our optimization activity in 2013. Firstly, further disintermediation of the banking system while maintaining a strong liquidity profile via new recourse to the debt capital market, both via public issuance and via private placements, for a total amount of 2.7 billion. Then reduction of banks' commitment for a total amount of 2.1 billion euro, out of which 1.5 billion is represented by the 5 years term loan repaid in April, while the remaining part consists of the cancellation of a number of relatively expensive credit facilities. Pool banking and bilateral facilities renegotiation of margins for an amount of debt of over 5 billion euro, mainly in the first part of the year, resulting in a margin reduction of more than 100 basis points. Growing role of institutional lenders by a total amount of 0.65 billion euro. The contribution from institutional lenders is currently around 1.3 billion. Institutional lenders represent a cost-competitive source of funding, granting maturities of up to 20 years, longer than what is available in other markets for the same amount. These factors made it possible to achieve an average cost of debt of 3.7% in 2013, in line with what was announced during the conference call for Snam's first half results. In addition to the reduction in our cost of debt, we have also improved the quality of our financing base and the soundness of our debt structure by reducing the risk related to the interest rate exposure. Fixed to variable interest rate ratio is from 49% at the year end 2012 to 64% currently, with an average duration of around 5 years, and extending the average tenor of debt. In 2013, we achieved a strong cash flow result. Our activities generated 1,698 million euro of cash flow from operations, which almost fully financed the disbursement for both CAPEX and financial investments. It's important to underline that Snam invested around 1.9 billion euro in 2013, being able at the same time to minimize the change in net debt, which was basically equal to the dividends distributed to shareholders. Looking at the cash components of working capital, in 2013, cash generation was 53 million euro, mainly related to the growth of tax payable of around 49 million, accrued in connection with the increase in earnings before taxes, and the positive effect of balancing activity of around 128 million, which was partially offset by the payment of 141 million related to the balance of the consideration for the unwinding of years. Such a satisfactory result in net working capital management is even more remarkable, taking into account that we did not factor any receivables during 2013. Let's now move to the balance sheet. Fixed capital increased by 1,016,000,000 euro compared to year-end 2012, mainly due to the acquisition of the interest in TIGF, which drove the increase of 551 million euro in the equity accounted and other investments. In addition, new capex for 1,290,000,000 euro were partially offset by depreciation of 769 million and subsidies of around 71 million. Total net financial debt amounted to 13,326,000,000 euro, up 928 million compared to year-end 2012. Comparing the net financial debt at year-end to the estimate of RAB and the value of associates, we reach a ratio debt to asset of around 53%. Thank you very much for your attention. We are now pleased to answer any question you may have.
Good afternoon, everybody. It's Marco Porro speaking. Let me invite you to focus the Q&A session on the full year results. We will provide all the strategic guidance as well the financial and operational guidance during the strategy presentation next March 19th. Thank you.
Thank you. If you would like to ask a question, please press *1 on your telephone keypad. Please ensure the mute function on your telephone is switched off to allow your signal to reach our equipment. If you find that your question has been answered, you may remove yourself from the queue by pressing *2. Again, please press *1 to ask a question. We'll now take our first question from Xavier Suarez from Mediobanca.
Hi, good afternoon, and many thanks for taking my questions. I have 3 of them, hopefully focusing on the results. I just wondered if you can give us an update on your latest calculation for the calendar RAB of by the end of 2013, and if possible also 14, and which deflator assumption that calculation is based. That would be the first question. The second question is on the balance sheet structure. I think that the CFO has mentioned quite clearly that the effort of making the financing of the company more efficient is an ongoing effort. I guess that the latest guidance that the company gave was 3.5% cost of debt for 2014. Without entering in maybe the territory of the next strategic presentation, can you give us a sense if do you think that target is realistic or even conservative? And the final point is on the outlook. I think that there is on the press release a mention on the focus on efficiencies. I just wanted to have a sense on from a management point of view, the capacity that the company has at this stage to continue digging into efficiencies. Many thanks.
Ciao, Xavier. Starting from the first question, which is the guideline for the RAB at the end of 2013. I will start from the RAB which we have at the end of 2012, which is in the range of 23.3 billion euro. This is the sum, the aggregate amount of the transport, which has been approved in the amount of 14.8 billion, LNG 0.1, storage around 3.7, and as far as distribution, we expect a value in the range of 4.8 billion. If we consider inflation rate, if we assume an inflation rate for 2013 of around 1.4%, and the investment we made, the estimation of the RAB at the end of 2013 is around 23.7 billion euro. Second question about our cost of debt. You remember that the preliminary guidance of 3.5% in terms of average cost of debt for 2014 which we provided. This was the one we provided during the third quarter conference cost result. These guidelines, I believe, is still valid, but could result somewhat prudent. As a matter of fact, I have to say that the funding exercise carried out in January and the further optimization measures to be potentially implemented in this first part of the year could actually create the conditions for further financial efficiency. Let me say that we will give you an update guidance for our cost of debt for 2014 during the next strategy presentation.
For the third question, our commitment is today to maintain the operating cost flat in real terms in the next period, and considering that the perimeters of that will increase a lot in the storage system. We are starting to manage a new storage field. We have an increase of around 100 to 200 kilometers in the transmission pipelines, but we think we have some opportunity of increase our synergies, our decrease in operating cost in the distribution business. That is the reason why we confirm our commitment to maintain flat in real terms our future operating costs.
Many thanks.
The next question comes from Stefano Gamberini from Equita SIM.
Good afternoon, everybody. A few questions. First of all, could you comment on your evaluation of your other stakes? If I'm not wrong, considering the 53% debt on RAB ratio, it should be around 1.5 billion euros. How you reach this value? Second, regarding the new regulation in the transport business, could you elaborate a little bit about the development capex incentives? What do you expect after 2015 onwards, and could this regulation accelerate your capex plan, or the opposite, postpone them? Third question regarding the distribution area. Shortly, the tenders will start. Could you comment on the rules regarding these tenders and the risk that you pay, that you will forced to pay higher value compared to the RAB due to this VIR that risk to be higher, and consequently, if your target to keep EBIT on RAB in the region of 9.5-10% is still confirmed, or is at risk in some way? Many thanks.
First question, very straight. The evaluation is for our non-consolidated affiliates is between 1.4 and 1.5 billion euro.
For the second question, Stefano, our investment are supported by different elements. One is the government strategy through the energy strategy, but anyway, with the new rules, we provide our capex plan to the Ministry of Development to analyze the evolution of our capex plan. So there is a formal, there is no formal approval, but it is the formal confirmation that our capex are in line with the strategic evolution in the energy sector. This is the reason why in the regulatory review, there is all investment are supported by incentive over the WACC, considering it's clear the strategic aspect of the investment. This is the reason why I don't have doubt that our investment will remain in place without risk of discussing delay of investment or, let me say, approval of the strategic aspect of our investment. You know, our capex plan is completely, in the next 4 years, is completely in line with the evolution of the energy strategy. You know, the second part of the Adriatic investment is foreseen beyond the existing capex plan, starting from 2018, and the reason is that times, let me say, is in line with the commitment by the new supplier. I can see LNG, TAP, South Stream. So, frankly speaking, I don't see the reason why our investment could be, let me say, discussed or in any way evaluated in different way. For the third question for the distribution, I can say that the rules today for to set the bid for tender are very clear. I don't see a risk. The discussion today is only to finalize, to tuning the difference of VIR, the industrial value, and the RAB. But with the last decree, with the last evaluations, if you consider that the industrial value VIR will be set net of subsidy, the value should not differ significantly from the RAB value. There is the reason why I don't see a risk in the future tenders to, let me say, to pay more or to have some extra valuation in terms of RAB.
Thank you.
We'll now take the next question from Roberto Ranieri from Banca IMI.
Yes, good afternoon, gentlemen. Two quick questions, please. The first one is on financials, of course. First one is on controllable costs. You reported transmission costs materially decreasing in 2013. My question is, probably I missed the reason why these costs are decreasing. So if you can give us one more time an elaboration about that. Second question is about distribution costs, and which are increasing a little. So I'm wondering if you expect this kind of a trend in 2014. On distribution as well, if you see in 2014 also some increase in revamping capex on replacement of cast iron investments in 2014. And my last question is about the TIGF. If you can give us the equity contribution to the equity results on your P&L from TIGF. I'm afraid I missed also this data. Thank you very much.
A full list of questions. First of all, I will start from the reduction of cost. We accounted in this year, in particular, I would say, concentrating the transport segment in the transport business. As I tried before to explain, in 2013, if we exclude the increase of pass-through elements, the decrease in our operating cost is in the transportation of around more than 120 million euro. First of all, we have to consider that last year we had risk fund provision in this segment, business segment, of around 50 million euro. Last year we used significant inventories which was sold, and so it is another contribution to such the reduction of cost. We have to take into account that all these two elements in reduction were offset by the increase of cost related to the early retirement plan that we accounted in 2013, which in the amount of 26 million euro. In the distribution, you can see the level of operating cost is in the range of 300 million euro. We are maintaining the level of efficiency we had in the past, and we are maintaining the advantage we have towards the parameter as an average, therefore permitting us to maintain a return in terms of EBIT to RAB in the range of 9%. Few seconds, please. Another question was about equity income contribution for the year. I would prefer to comment the full year trend, not the last quarter. So first of all, we have to start take into account the negative one-off tax expenses cost related to the transaction of TIGF. We're talking about the cost, the tax cost for the acquisition in France, and which has been accounted for 35 million euro. This has been mitigated by three positive elements. The first one is around 5 million euro of additional contribution from the Italian gas distributions affiliates, so the non-consolidated activities in the distribution. The other positive contribution is the higher contribution we receive from the UK, the interconnector UK, due to the full year consolidation. The third positive contribution, this is in the range of 12 million euro. The third positive contribution is due to the 5-month consolidation of TIGF, the net income of TIGF, which pro quota for 5 months represented for us around 8 million euro of contribution.
Thank you very much. I'm sorry if I asked more than 2 questions. I'm very sorry.
Oh, no, 3 is fine.
We'll now move to the next question from Jose Reitz from Macquarie. Please go ahead.
Yeah, good afternoon. Just one question. If you could share with us a preliminary booking rate in the French gas storage campaign for the thermal year 2013-14. Thank you very much.
I would start from the level of storage booking capacity accounted in 2013, which we remember was at the level of 78%. As far as the year 2014, actually the booking capacity has not been completely, the process is not be completed at all, but we already have some indication, and we can confirm the new booking capacity for the year is something close to 85%.
Very much.
The next question comes from Anna Maria Scaglia from Morgan Stanley.
Hi, good afternoon. I've got two questions, if I may. The first one is concerning the level of net debt. If I'm not wrong, at the 9 months you guided for a net debt at the end of the year at 13.6 billion, so the actual number is some 300 million lower. Can you just give us a sense of what are the main differences versus your previous expectations? And if you think that this is the new base, i.e. there is nothing that is going to be a reversal next year, so the net debt going forward is going to be some 300 million lower. Second is regarding the cost for the redundancy plan. Is it all? I mean, are you going to book anything next year, or is all booked for the whole plan? Therefore, we shouldn't expect any further restructuring charges going forward. Thank you.
Starting from the second, which is easier, the 26 million accounted at the end of 2013 is the full amount of cost related to the early retirement plan for the 300 employees. So we do not expect any other cost related to this plan. As far as the level of our net debt at the end of the year, it is true that it is lower than anticipated. The lower than anticipated debt is mainly due to both lower cash interest expenses and net working capital improvement. I would say that roughly 50% of the net working capital improvement can be considered as structural. So it is something that we will maintain for this year. While the rest is expected to be resolved in the next months, as it relates to the contingent action we put in place at the end of this year. I would underline once again that such a result has been obtained without factoring any receivable, and therefore I believe it represents a real remarkable result. As far as the net working capital evolution, let me say that the positive change in the year, which is the cash working capital positive contribution, is equal to 53 million euros, which was mainly due to the cash generation of both commercial working capital for around 64 million and the tax payable, the dynamics of the tax payable for another 110 million euro, of which at least 70 million is due to the VAT paid in 2012 and refund this year. So it is an element of a structural element, let me say. These positive elements have been partially offset by the payment related to the second installment for the unwinding of years in the amount of 141 we paid in January 2013.
If there are no more questions,
we'll now move to our next question from Charlotte Pete from Schroders. Please go ahead.
Hi, my questions have been answered, so thank you.
We'll now move to our next question from Olivier van Dusselaer. Seems he's stepped away. We'll now move to our next question from Stefano Bezzato from Credit Suisse.
Oh, yes, hi, Stefano Bezzato from Credit Suisse. Two pretty general questions. The first one is you can comment on what is your expectation on the new energy policy that the new government in Italy will have. Apparently, the aim of cutting electricity bills, energy bills, is high on the agenda. The new Prime Minister has been publicly stating that returns for networks are too high. You are in an advantageous position since you are in the very early stages of your regulation, but I was wondering, do you see the risk of a change in the regulatory framework independently from what the current regulatory cycle is? And the second question is on M&A. Can you give us an update on the possible acquisition of TAG? Is there being any progress there? And more in general, have you identified any new target in Europe over the past few months?
Thank you, Stefano. I start with the first question. I can say that, frankly speaking, the previous government set the strategic energy plan, took into account all the aspects of the energy issues in Italy. Firstly, the price of the energy. The second, the security of supply. I don't think, frankly speaking, that could be some different approach by the new government. In terms of cost reductions, the discussion in place where by the incentive in some specific energy business, but I don't think that the problem could be the cost of the transmission of the regulated cost inside the total bill of the energy. I think you know very well that the impact of the regulated business, transmission and storage together, is lower than 5% of the final price. But at the same time, the investment we need for the interconnection of the different point of exchange, the different hubs in Europe, are very strategic to maintain the Italian price aligned with the European one. In particular, our investment in transmission and storage are investment, especially in storage, are investment defined by the government, set with a decree 2 years ago by the government. In the transmission, our program is to complete the linking, the interconnection of the European network, which could provide some opportunity in terms of increasing the liquidity of the gas market. There is the reason why I don't think that for our business perspective could be some change or, let me say, some different approach by the government. The discussion today is, the discussion in place is to speed and to confirm the new sources, the new supplier of gas in Italy, through the different, through the south of Italy, through the Azerbaijan or through the LNG. So is only my what I can understand today is that the actions put in place 2 years ago, 1 year ago, in the energy sector, specifically for the gas sector, are completely in line with the existing strategy of the government. So I don't think that could be some surprise. For the second question, for the TAG, I confirm that TAG is an asset that could be interesting from a strategic industrial point of view for Snam. And today is, let me say, premature to talk about it and about the acquisition of TAG, but is our intention to start and to speed with the evaluation of the possible acquisition. It's clear that our approach is to follow our strict financial discipline in order to maximize the value of our shareholder. And we will evaluate all the options, and we could let me say, we could also consider a dedicated capital increase to cash deposit. But anyway, we are today is premature to speak about the result or the opportunity in play which is running today.
Thank you.
We'll now move to the next question from Enrico Bartoli from Main First.
Hi, good afternoon. A few questions on my side. First of all, could you update us on the discussions with the regulator about the regulatory review for the storage business, which is the status, and when can we expect the publication of the consultation documents? Then I have a general question on the Italian gas system. You provided a guidance of an expectation of a flat demand in 2014 compared to 2013. Could you briefly elaborate on what kind of assumptions you are below this kind of guidance in terms of industrial production, use of gas from thermal uses, and so on? And finally, since we were talking about the national strategy for gas, just a general question on the investments in gas transport in order to have a hub for gas in Italy. So actually, the gas would be not only used in Italy, but would be also for increasing the security of supply at European level. Do you think that there would be any chance, or there are any discussion in order to share the cost of building this kind of structure, not only to apply the cost on Italian consumers, but to share that with other countries? Thank you very much.
Thank you, Enrico. The first question of the storage, frankly speaking, today we are not discussing with the regulators about the review of the storage. My view is that a document could be published by the middle in May, June, could be a period line. But I imagine that as soon as possible we will start with the discussion about the new regulatory regime. For the gas evolution, the gas demand in 2014, I give you a detailed view next March, but anyway, in our plan in 2014, we consider a flat evolution of the gas demand. The gas demand will be, in our expectation, in line with 2013. There could be some increase in the gas injection in the network due to the different storage refilling and so on. But anyway, could be very flat, around 70 BCM. In the national strategy, I think is better, is a strategic, let me say, view, and we can discuss the important at this point in March. But anyway, I give you some comments, some guidelines. First of all, our investment today are strictly linked to create the interconnections with the European pipe. The hub will be a consequence of new supplier in Italy. we need anyway, independent of the new supplier in Italy, the interconnection with the European. So it's no, let me say, the investment, the part of investment we are doing in north of Italy are not, let me say, linked completely to the future hub. We need this type of investment in the different periods of the year to increase the liquidity and the exchange with the different gas exchange point in Europe. We have an experience starting from 2 years ago with a line of the price due the different the increase of the gas exchange through the different platforms in Europe, independent of hub or future hub in Italy. The second comment is that 80% of our investment in the Po Valley, which give us the possibility to increase the reverse flow capability, 2 million in 2015, 40 million in 2017, 80% of this type of investment are anyway necessary to improve the gas transmission in the northwest of Italy, following not only, let me say, the possibility, the security of supply in Italy, but following the European guideline, the European directive for the the name is N-1 rules, which means that we have to provide the gas in northwest of Italy, in Piedmont, anyway, if you have completely stop of the Russian gas. And if the Russian gas, 30 BCM per year, will stop in the winter period, for example, we need to bring the same gas from the Algeria gas or LNG. And in this case, we need to improve the connection from eastern to west of Italy. So 80% of the spending of the CapEx is dedicated to this type of program, which, frankly, give us the possibility to improve the reverse flow. But it's not dedicated for the hub evolution. It's dedicated for the interconnection of Europe. The second comment is that it's clear that an interconnection of Europe, a gas exchange, a reverse flow, could provide some advantages for the European country, particularly in Switzerland and Germany. There is the reason why there is in place some discussion at European regulatory level, which is ACER, the name, with the Italian regulations, to have the possibility to understand if it's possible, let me say, to share or to socialize some strategic investment in the different countries.
Okay, if there are no more questions, thank you very much to everybody, and we will speak to you next March 19th. Thank you. Good afternoon.